Hello, Steve Santee, Certified Mortgage Planning Specialist here to talk a little taxes. So there's been a lot of rumbling out there about the new tax code, lots of questions coming my way. So I really just wanted to take a few minutes and hang with me on this to go over some very basic pieces of it, specifically how it impacts home buyers and homeowners, a unique tweak for some young children private school benefits, if you will, and then finally to talk a little bit about how it impacts business and independent contractors. So I've been spending some time dissecting and discerning this information. I met with my accounting partner and friend Quinn today to review some of these details, and I wanted to share that with you. I'm not a CPA, I want to make that clear, as this is just some of the basic information I'm sharing. You want to connect with a qualified CPA. Quinn is definitely one of those, and his contact information is below. So I've learned that there are lots of changes to the tax code, and specifically one is the tax brackets. Effectively, this is the good news. The tax brackets have went down for pretty much everybody. So the percentage of tax that you pay on taxable income is lower under the new tax brackets. It's better and worse for some people, and that's just how things operate when you're trying to satisfy over 300 million people. I also want to highlight that I'm here in Washington State, so states will be different and you want to check into that. Either way, one of the biggest questions I get is, will this impact my tax return that I'm doing right now for 2017? And the answer is, for the most part, no. You're under the old system. Next year, this new thing will kick in, but you want to be planning and preparing, especially if you're a business owner. We'll get to that here shortly. Some of the few main questions that I get as it relates to home ownership is my interest still tax deductible, and are my property taxes still tax deductible? So let's go over that quickly. First and foremost, the old interest deduction was $1 million maximum loan amount, and 1.1 in some cases. The new system is simplified and reduced down to $750,000 across the board. As far as property taxes, the old system was unlimited, and the new one says if you're single, you got a $5,000 maximum deduction and $10,000 if you're married filing jointly. So there is another impact, and it has to do with standard deduction. And that gets into a little bit of accounting lingo, but it does have the potential to impact a good portion of home buyers and homeowners out there. Specifically those with the lower loan amounts, often first-time home buyers, or lower purchase prices. And we can definitely get in detail in a one-on-one as to how that's impacted and why those different changes are there. Another question I get is, can I still get gifts for my down payment? So the same rules are in place as far as the annual limits of $14,000. The lifetime limits doubled. So you can gift a little over $11 million if you're single, and now $22 million if you're married filing jointly. Finally, one of these other questions I often get is my relocation deduction still there? Can I still deduct the relocation cost I have? And the answer is no, with one exception. If you're military, you still can. So that kind of covers some of the basics on the real estate, and I see and am often asked, how is this going to impact the real estate market? The reality is that we're not anticipating or seeing thus far any impact to the real estate market. The tax deduction benefit of owning real estate is usually very low on the list for a buyer. It's primarily that appreciation is where you're really winning, and then finally moving into that quality of life component of owning your home. Now, on the flip side of that, there is an additional benefit out there for many investors. So those who have rental properties have the potential to get an additional 20% deduction on their rental properties income. So we could see some appetite out there from investors, because that is a significant portion and a very important number to their taxation situation. Let's move on to this unique component in the 529 plan, which was previously set up just for secondary school and college expenses, things of that nature. So what they've now done is they've added on top of that and said that you can use up to $10,000 of those funds to fund your private school for primary, for elementary, middle, or high school. So that's a big change and it has an opportunity to affect a lot of people. So I want to make sure that we're taking advantage of that tax opportunity. To close out, I want to focus in on the business segment or that independent contractor. Now this one's got a lot more moving parts and I'm going to be rather vague, but I'm going to send this message. There is a number of complexities that could help or hurt your business filing strategies. And they depend greatly upon the amount of income that you make, how you pay yourself in a W-2 type situation or a pass-through, what your entity is, and gets down to what type of business that you have. So I am going to request those business owners, independent contractors, connect with a qualified CPA just to double check and make sure that they're doing things right, and if not, make those adjustments. As I said, it can have a significant impact and definitely worthwhile to look at that and make those changes now as opposed to much later where some of that will not be able to be reversed. That's all I've got for you today. Hopefully you found this informative. Please give me a call, shoot me an email. Let's connect if you'd like to go over it in more detail. Happy to chat with you and answer any questions you might have. All right, we'll see you soon. Bye-bye.